Good evening, guys. My name is Gavin. Welcome to M Trading webinar. M Trading's webinar. We are hosting a new webinar on a weekly basis, hosted by myself and Dominic. Any questions, please do put it into the chat. But yes, we are going to cover within our first webinar is understanding price action better. Yep. So we are talking about price action, its purest form of trending or non-trending analysis. Yep. So what I talk about in price action is looking at price itself. Yep. So what is the current price at the moment? So we're currently looking at a chart of gold. So gold is currently holding the 1250 handle, that price level at the moment. So what I am concluding from this is that this is the true representation and the true valuation of this asset price. Yep. So any news, so macro data or political uncertainties will have and has impacted on this asset, and this is the true current valuation. So as a technical analyst, you are viewing the charts as a leading indicator. So any fundamental changes, any macro news, or any particular political uncertainty will be reflected within price action. So you're able to view price action as a story. Yep. So you can go back into history and see what has taken place previously. Yep. So there are a couple of specifics that we look for. So there are certain rules that we look for within price action, which I will be covering with you guys today. Yep. So the key point is looking at price action from a slight distance. We're not looking to, at the moment, do any specific candlestick analysis. Yep. So in the short term, we're not looking for specific candlestick analysis. What I am looking to do is look at the bigger picture. What has happened in the prior 2 months, 3 months, 6 months, 1 year period? Yep. So we are looking for a range. From a starting point to a finishing point. Yep. So the first key point I would say is the first point of call for price action is where are the highs and lows. So in this area over here, so you can see this is the low. Can you give me a confirmation, guys, so that you can see my mouse? Yep. So, and I know that you're able to track what I'm doing on the charts. Just give me a confirmation, guys. But yes, so what I'm seeing at the moment is that this is the low. Yep. So we have this as the lowest price, which is in the range of that 1205 handle. Yep. And this is our high in this price action range. So looking at highs and lows of the market, that is what you're looking to do. So not looking and focusing on specific candles within. Nope, we are looking at highs and lows. So this will be seen as the peak. Yep, so this area here is our peak. Yep, so that is the highest point that we've been since the 6th of July or 5th of July. Yep, so 5th of July, this is the highest range that we've been at most recently. Yep. But at the same time, this is our low, which is also known as a trough. Yep, so the low is your trough, the high is your peak. So doing your analysis, when you're trying to read price action, yep, so your aim is to read price action correctly to set up high probability trades. Yep. So what we're looking for is within price action is, are we making new highs, or are we making new lows, or are we making equal highs and lows? So if I see the market go sideways, where the new highs are matching the previous highs but not making new highs, and the new lows are matching previous lows and not making new lows, you would see that as a consolidation. Yep, so that will be seen as a consolidation zone. Yes, if I just remove this, which could be similar to, if I just hover backwards, this point here. So in this area here, we've seen, okay, there was an impulsive sell-off reaching down to this price action low. We have a high, a low, an equal high with a few pips above, a higher low, and then another equal prior high. Yep. So these highs and lows are within the prior price action movement. So therefore, you would see this as a consolidation zone. Yep. The aim is, guys, most traders are looking for trends. Yep. So you're looking for, you're reading price action to see whether the market is trending or we are ranging. So this consolidation zone will be seen as ranging price action. Yep. We do have a breakout that takes place and does break below that previous low. Make a new low at this point over here. So we'll make a new low, make a new a lower high, and then a lower low. So that is the next step, guys. Once you start to see that there is a trend, so when prices are increasing, yep, so increasing or decreasing, that defines whether the market is trending. So currently, what we're seeing at this point over here is that, okay, the market is trending. So we're seeing market move up from these lows and increasing such as this. So this is seen as an uptrend. Yep. At the same time, we are seeing a formation of higher highs and higher lows. That is what defines an uptrend. So from this low, we make a higher high in this zone here, and we go on to a higher low at this point over here, and then go on to form a new high. So you can see that is your next new high. So we are always looking to break that previous high. So we're looking to break the previous high, but as we're in an uptrend, we're not looking to break the previous low. Yep, so prior to this, we're not looking to break that previous low. So that is showing us, what is it showing us, guys? Let's get some interaction in here. Guys, what are we seeing? What does this mean to us? If we're seeing prices incline, what are we seeing? Yep, so we're seeing bullish sentiment. Yep, so overall we're seeing extremely bullish sentiment. So from this point on, you can see how impulsive that move is. So it's one strong momentum move to the top side, a very small pullback, and then continuation higher. So all up to this point here, we have our impulsive move. So you can see from these prior price action highs and lows was not as significant. So just as much as the buyers were able to push it up to this high, the sellers were just as easily able to almost bring it back down to the previous low. But in this scenario, from this low, we saw that the buyers were significantly stronger than our sellers, who were unable to bring it back to a significant level. Yep. From this point, what takes place? So this could potentially be seen as what now? What do you expect this to be now, guys? What do you guys think this is now? As we've just previously discussed this, what do you guys think this is now? Yeah, so this is a consolidation zone. Yep, so we're not making no new highs, we're making no new lows. Yep, so we are seeing a price action range within a higher time frame or a longer period uptrend. So there is an area of indecision, is what we'd call it. Indecision taking place within this range. Yep. And then we have that next breakout, the potential retest, and a new high take place. Yep. So that is price action in its entirety. Yep. So we're seeing the formation of price action. We're looking for two key points. Yep. So two key indications in the market. We're looking for whether we are in a consolidation zone and market is ranging within that consolidation, or we're looking for a trendy market. Now it could be an uptrend and it can be a downtrend. Yep. Another tool I might add to this is a secondary trend line from this low to this low. So why do I have this secondary trend line? Guys, what do you think? Why do I have a secondary trend line? Right, so we are seeing that, okay, from this point, this trend line is in this direction at this gradient. So that is showing us, okay, there is some buying pressure, but from this stage onwards, we're seeing that the buying pressure, that momentum has increased significantly. That is way off from its primary indicator, its primary trend line. Therefore, we would place a secondary trend line. So as you can see from this point here, that we're we are currently retesting that that secondary trend line. Yep. So that can be also enforced into your setup. Yep. So guys, just do a recap on the price action and looking at this the candlesticks. And so the first aim is look at the bigger picture. Don't zoom so close into price action. Look at the individual candles as of yet. For your initial trade idea, look at that bigger picture. Zoom out a little bit and try and read that story. Try and understand what has taken place. Yep. As we've said, we are expecting, well, we know that within this chart that anything that's been released, whether it's fundamentals, macros, or political uncertainty, has been evaluated in this price, asset price. So we are looking at doing our analysis of looking at highs and lows, and if we do form new highs, when we know we're trending. If we're making new lows, we're now in a downtrend. If we're making equal highs and equal lows, then we are in a consolidation zone. And when you're in a consolidation zone such as these, so such as this and this, that generally tends to mean that there is an indecision between the buyers and sellers. So that means they are matched up, they're equally powerful. Yep. So no one is outweighing the other. There's this equal strength there. So therefore, there's that uncertainty and there's a balance between the two, the bulls and the bears as they call it. You wouldn't expect a significant move to take place within that range. You could trade it within that range, sell the highs, buy the lows, but you ideally want to be looking to take a trendy market where you do see that either the bulls or the bears are dominating that particular asset. Yep. Okay, so moving on from actual reading that bigger picture price action, the next step is to look at, and we have discussed the higher highs and higher lows, and then in a downtrend you have lower lows and lower highs. Yep. So looking at this previous downtrend, as we can see over here. So that is be your lower high. This is your lower low, and that is your lower high, and it continues in that way. So you're looking for a series formation of lower lows and lower highs. Depending on how much price action you view, and let's just zoom out slightly. Yep. So you could look at a bigger picture. So if I just delete some of these, I'll be looking for, okay, so we'll take this bigger picture view. So that is our high, guys. That is the highest point that we've been, and that was on 2nd of June. So from this high, we moved lower, so that's to our low, move to the next high. So each one of these are called lower lows and lower highs. So the key point to remember is we're always looking to break the lower low, but we're not looking to break the lower high, because that would indicate a potential trend reversal. So that is, as you can see, lower lows, lower highs all the way through, which gives us a good indication of a downtrend. You then therefore place your downtrend line as such. Yep. And ideally, remember to place your downtrend line above price action in a downtrend and below price action in an uptrend. But yes, lower lows, lower highs is a definition of a downtrend, and each lower low is seen as a support level. Each lower high is seen as a resistance level. Yep. So to give you an example of that, we're seeing at this one here, sellers overcome buyers, been able to push the market down. Buyers were then able at this price level to assume that, okay, this asset has now become cheap, and they have overpowered the sellers to push the market back up to these highs. Again, the sellers will view this as, okay, it's looking overbought or over expensive. So let's take some short positions. The longs, so the bulls, have decided to take profit, and the sellers, the bears, come back into the market looking to short this asset. Yep. So that's what we're seeing, is that fight between bulls and bears. Yep. So buyers and sellers trying to dominate that market. Okay. So that is for a downtrend, so lower lows, lower highs, but also you are looking for support. So supports at lower low and resistance at lower high. on the same in the same process for an uptrend, we're looking at a series of higher highs and higher lows. So we're always looking to break the previous high as we have previously there, but we're not looking to break the previous low. So that would enforce a potential reversal, an end to that trend. Yep. So now let's cover, we've covered price action in regards to candlestick analysis on the bigger picture. We've talked about trending zones and consolidation zones. So you have your trending phase that takes place. So this is seen as a downtrend. That is seen as your uptrend. We have within that, and sometimes straight after or before, yep, you would have a consolidation zone where there is that balance between the buyers and sellers. So we are now going to talk about trend lines. So remember that the downtrend line is above price action. So your downtrend line is above price action. The reason being is, the first point is, it shows you the direction of the trend. It's telling you that we are in a downtrend at this gradient. The second point is, it allows you to see this as a resistance. So every time we expect prices to come back to this level, we'd expect selling pressure to take place. And also the third point is, it allows us to find areas where we could sell the market. And when you're looking to sell the market, so you're looking to go short, you're not looking to go short at the lowest price, so you don't want to be the last seller in the market. You're looking to sell at the highest price when it's expensive. Yep. In the same process, when you have an uptrend, you have your uptrend, it's always below price action. It's below price action, and therefore it's giving you, first of all, the guidance in which direction it's going. So we know it's an uptrend, and also what is its gradient. Yep. So how strong is that momentum move? Second point being is, it's seen as your support level now. This becomes your support, and also it gives you buy signals. So you are looking to buy. Yep. You're not looking to buy at the highest price, you're looking to buy it at the lowest price. You want to buy it at a bargain price. So this will give you good indication of where to buy. Yep. And that is your trend lines, guys. You can have your primary trend lines as I have here. So this is a primary trend line. This is also a primary trend line. But we also have a secondary trend line, which shows you an increase or decrease in momentum that takes place. Yeah. One key point to mention is the amount of touches that are required to your trend lines and your support and resistance levels, which I'm going to cover next. So we require 3 touches as a minimum to confirm a trend line. If we tend to see that a trend line is broken multiple times, then you would only use that trend line as a guide of what the direction of the trend, rather than a potential sell or buy signal. But if you're seeing that a trend line is respected by price action multiple times, ideally as a minimum, the minimum is 3, then you can take a trade based on a trend line rejection. So the way to draw a correct trend line is take it from the high. That is your first point. So point 1, expand it to your second point. That is your to the next high. Yep, so expand it to the next high, which is your second point, and then expand that line. So you can either expand that line or continue that line in that direction. And you're waiting for that potential third touch. You're looking for the third touch. If you do have that third touch, that would validate that trend line. So it would confirm the trend line. Yes. And as you can see, we've got 1, 2, 3, 4 touches this trend line, and there's a 5th there. So there is a 5th touch. So it was a very strong trend line that we broke through. Yep. Key points to mention is, okay, so if you have multiple touches within this pivot high, respecting that trend line, and that enforces that trend line further. Yep. If you just have a single touch, okay, you have your touch required. But the more touches too within that pivot highs, the pivot lows, enforces that trend line further. Also, how long has this been intact for? How long has this been intact for is significantly important. Yep. Okay, so that is your trend lines. Yep. So trend lines, the key point to take away is draw the trend line correctly. Try and keep your analysis as objective as can be. It is very easy to construe with some of your study lines and be able to show you what you want to see. The aim should be is to draw it correctly in the correct manner. Yep. So you always project it from one point, take it to the next point, and expand that line. Yep. A key point to mention is if you are drawing it slightly incorrectly, so it's a slight off, so instead of taking this high and taking the next high, you're slightly above. When you see it further down the line compared to the correct one, there will be a large spread between the two. There will be a significant difference between the two. So it does matter. Your analysis does need to be to perfection. Yep. Okay, so support and resistance. So as discussed a little bit earlier, which is these lower lows and lower highs, or higher highs and higher lows, are seen as support and resistance. What you can also do is look at how many times do we see price action get to a certain price level. Remember, the valuation within this asset is in these numbers. Yep. So we're seeing, okay, this is seen as a good value at this 1260 handle. We're seeing a retracement up there at this point, so this could be seen as potentially profit taking, or some sellers coming into the market, push the market lower until the buyers will see this as a bargain price again, and are able to push it higher, are able to look to buy to make a new high. Yep. So this will be seen as a potential stronger resistance. And if I've seen that, okay, previously we've also held that area, that also confirms it as a strong level entirety. Yep. So throughout that time period, it has been respected. Naturally, the longer that it's been intact for, if it's been intact for years, that is a stronger level than if it's been intact for a couple of months. And that goes with your trend lines. If your trend line's been intact for a couple of years or 6 months, that is significantly stronger than a 2-day trend line. Yep. So again, let's put in our support and resistance. So taking that high, we could just take that high. There you go. You can see how it got to a pip or at that price level, and it's done it recently. So yes, we can see how we got to the 1258 level, and we're seeing either profit taking or sellers coming into the market. So this is seen, so if it is above your price action, it is seen as a resistance level. Yep. And ideally, just like your trend lines, you require 3 touches. 3 touches is what confirms the level. So we can see got 1, 2, and we have our 3rd touch. So that definitely is a confirmed level, and this goes. This is from 9th of June. I can potentially even zoom back slightly further and have a look at, has it done it previous to that? And as you can see, look, there's a touch here. So this is the zone over here, potentially a zone in this key area here. Yep. So we can see that this is a very powerful price level. Yep, for your support and resistance. So this is, yep, seen as your resistance level. So think of your resistance as the ceiling. Price action is trying to break through that ceiling, but it's rejected by the sellers that are holding that level. Yep. At the same time, your support level is seen as your floor. Let's zoom back in. Okay, so your support level is seen as your floor. So the idea is look at key levels. Yep. So your aim is to find key levels where we've seen price action get to, hold that level, respect that level, either break through or reject that level. So we can see at this 1235 handle that this has been respected most recently. Got 2 touches there, or 3 touches to be fair. Also is tested as a resistance. So remember, they can interchange. A support can turn into resistance, or resistance can turn into support. We've also had previous touches to this level. So this is seen as your potential support level. Remember, you do require 3 touches as a minimum to take this as a confirmation of that price level. Yep. So that is your support and resistance, guys. That is your support and resistance. The additional points that I do want to make is round numbers. Be aware of round numbers. You will see round numbers hold a significant resistance or support level. We'd often see price action get to a round level, like we've almost tested the 1260 level, but we've actually seen sellers come in a little bit earlier to push the market back down, to show that they're holding this level. And the reason why we're doing our analysis, why are we doing our analysis, guys? Why do you think we do our analysis? So yes, so we are looking for areas of least resistance. So my aim is to take a trade with a correct stop loss within my risk management rules up to a target level that's within the next resistance zone. That is the least path of resistance trade. Ideally, if you have a trade that has a very high risk reward, that is awesome. That is what you're looking for. Yep. But your aim is to do your analysis correctly by reading price action and understanding price action better. By looking at highs and lows, whether you're making new highs, new lows, or equal highs and lows. Looking at the peaks and troughs. Are they at a round number? Are they significant? You also want to work out whether we're in a consolidation zone or we're in a trending phase. Yep. And understand how to correctly draw an uptrend or a downtrend. At the same time, pay significant importance to round numbers. They hold significant value in the market. A lot of traders that are not electronic based, so they're not trading through a computer system. They're either calling up their broker and placing trades over the phone, or they're in the pits, face-to-face trading. Yep. They are not trading at, okay, I'll take a trade, I'll look to buy at 1235.66. Yep, so, or 1258.76. No, they'll be looking, okay, I'll buy at 1258. Buy at 1258, I'll take profit at 1263. That is the correct way, that is the way that it was traded previously, and it still does carry out now. Yep. The key point is, remember, electronic trading is now, is just only recently it's just been below 50%. It's just below 50%. So electronic trading is catching up with the rest of the market, but it's not fully enforced by all traders. Yep. Okay, guys. So I will allow some of you guys to ask any questions. So if you have any questions about what I've discussed, or are there any particular topics that you would like me to cover, whether it's within this webinar or another webinar, we can do so. Yep. Okay, I'll give you a second to put in your questions, but yep, as a breakdown, a breakdown of what we've just spoken about, so a summary. The aim was to understand price action better. So we are looking at peaks and troughs in the market, the bigger picture view, not intricate candlestick analysis. We're looking at new highs, new lows, equal highs, equal lows. So new highs, new lows, so they are seen as trending phases in the market. Equal highs and equal lows are seen as consolidation zones. Ideally, you don't want to trade in consolidation zones because there is a balance between the buyers and sellers. You're looking for that trending phase where you can get in with the you can go in with momentum either with the buyers or with the sellers. Support and resistance are seen from previous highs and lows, along with how it's been repeated previously. You would often see market either repeat or rhyme. That is because there was a trader who took this trade at this price level. Okay, they sold gold. Yep. So in a 1 hour time frame, looking at gold, they sold gold at this price level to make this much profit. So would that trader now see the price around that around that level again? What is the likelihood of him seeing that as another resistance level where he's taken a trade previously and it worked out correctly, he would likely to take it again. Yep. So that is why prior price action holds in the market very well, and we often see how markets either repeat or rhyme. Yep. Okay, so so we have a question. So where do I think the price will be going next? So my view is to use my analysis to give me the ideas I require. So my view on gold is currently, yes, we're seeing a bearish movement back to our secondary trend line. The next indication will be would we break through this level? So I'll be looking for a potential break through this secondary trend line, also potentially breaking the previous low. Remember, we're looking for a series of lower lows and lower highs. And if that does take place, that could be a nice short position back to our primary trend line. Yep, so that's where I'll see the next resistance for my potential trade. At the same time, your first concept, your first trade idea should actually be looking to go long, because we've actually broken a significant downtrend for multiple touches, and we've seen a significant impulsive move to the top side. Significant impulsive move to the top side, making new highs and new lows. Yep. So the momentum is with the buyers. Not most recently, but overall momentum is with the buyers. So this could be a potential buying position, because we are at this secondary trend line. I'll be looking for rejection at this level. So if we just zoom in slightly, let's have a look at it a little bit more clearly. Yep, so you can see how it's gone back to this low, it's holding this level. So this is where now, when you're forming your trade idea, you go into detail and look at price action and look at the candlesticks further. There is a potential of a topping structure here where you can see a head and shoulders formation, but it seems like we've almost completed its minimum price objective, but we are holding this secondary trend line. I'll be looking for a break. So if we go on to break this previous high, so I'll be looking at this previous high. So if we break above this previous high, that could be a nice long position. Be aware there is just resistance over here. So ideally, if you're looking at a longer term trade, you'll be looking for the break above this previous high and potentially even a break above the 1260 level. So a buy signal will be above the 1260 signal. A break of your secondary trend line, it will be a sell signal back to your primary trend line. Yep. Okay, guys. Let's wrap up there. At any point, guys, you can get in touch with myself, Gavin, and Dominic in regards to any questions you have on what we've discussed. At the same time, be aware there is another webinar taking place next week, same time, same day, so next Tuesday at the same time. So I hope you can all attend, and I hope you've enjoyed this webinar. Please do be interactive. You will gain more experience and more understanding if you are interactive with myself. Yep. Okay, thank you guys. Thank you for listening. Enjoy your evening, and I'll see you in a week. Take care, guys. Bye-bye.